Okay, Fastenal, FAST on NASDAQ. We talked about this back on November 21st. We liked it then. We've liked it actually for a long time. It was trading at $49, and it was down a little bit at that time because the whole market was just kind of really out of sorts. So we thought it was a good time to step in. It's now trading at 57. Mind you, it was up just today, 6% alone today. And that was because they released their earnings, and their earnings beat on the top line, were in line on the bottom line. But there was significant growth, and sometimes if you beat on the top line, you get almost more credit than the bottom line because you're growing. So sometimes, maybe when you're growing, you spend a bit more than you thought to get that growth. But that I see that more often than, if you meet the revenue line and then you miss on you beat on earnings, then that typically doesn't get you much in the marketplace because it kind of hurts your growth. So I think what's important is, the most important thing is to just look at our profile again. And let's jump right into that. So there we go, but we have to bring up the right file. There we go. Okay, so you can see it's a super consistent company. Return on capital is consistently in the low 20s. It did dip down to 14% in 2009, but that was, a really tough period for everybody. That was the crash, the stock market crash. And it's just, went right back up to 20s, held steady, maybe dipped a little bit by 2016, but it just kept climbing ever since. And you can see I haven't not touched this valuation. I get a $72 value on our default. And it's, that's about fair to me. I think it could actually do better because it could beat the fade. And I'll show you what I mean. I don't often do this on a presentation like this for video. But let's just change our fade rate from 8% to 6%. So it means it's going to fade less severely. And just that little change gets you a $92 value. So, I don't want to put an exact price on it, but I would just say there's room for this to there's lots of room in the valuation, room for error in our forecast. So I think it still looks good. I think another thing to look at is the dividend history. It's quite an impressive dividend history. So the top one is the dividend on a quarterly basis. So back here when it's kind of sporadic, it looks like they were paying a semi-annual one, and then they started going to a quarterly one. And this one on the bottom is the annual dividend compared to the cash flow. So 56% payout ratio is a little high, but you can see they keep up that dividend, and cash flow is growing anyways, so why not? So again, Fastenal, just another quarter. This is the kind of company that just just kind of does this. It just puts out a good quarter, seemingly every quarter. And that's exactly what you get. Hardly ever lets us down. That's definitely my kind of stock. The slow and steady, but still high return on capital. It's just a great business. This is the my kind of stock. Okay, Fastenal, FAST.